Hey guys, what's up? Todd from Trading Analysis. Day after Fed and big shutdown, rally all the way back up. And is this a short covering rally or are we at new highs? Well, it's crazy. I mean, the Fed just cut rates. They said it was kind of a mid-cycle cut and an otherwise like greater tightening, who knows? And then there was more commentary that came out that said the Fed was going to potentially ease again. Like they're going crazy. All I know from a technical point of view and fundamentals, come on in, Joe the intern here. If you look at this 30-year bond chart in the daily, I mean, how obvious of an Elliott wave pattern is this? 1, 2, 3, consolidation in 4. It looks like we're going higher in 5. And the way this is kind of shaping out up there is I feel like the Fed is just going to be behind this market. I don't think they're going to be tightening rates anytime soon. I mean, they just cut rates with the markets at all-time highs. Like, what's to stop them from doing it again as long as the rest of the world stays weak? So here's the conundrum we're in, right? I think technology is actually extremely strong, and actually XLK, the technology sector spider, is right back at the highs. I have the stock. I actually want to set up a trade to kind of sell a covered call in the event that this is a false break. We might get a little bit of consolidation before we move higher. So I want to take some premium in a sector which is technology that I very much want to be in. So let's do it. So here's the XLK on the daily chart, going back to the beginning of 2019. And you can see we have a pretty good parallel channel sourced from the lows in early Jan to June of 19, projected off the, what I'm conservatively calling the A wave high. So, typically from this point of view, we're just mid-range in this uptrending channel of 2019. So we're not overbought, we're not oversold. So that in mind, where could the C wave go? We'll do just a quick Fib projection. A 61% relationship of C versus A puts you at 85.76. So that in mind, as we zoom in here a little bit, the best wave count that I can see here in the XLK, which again is your technology sector spider, is I would say we just went through the third wave here, right there, third of third. This was yesterday's big sell-off down into support, and we rallied back up in wave 5. Now let me just do an exercise. Let's say we didn't have that channel. Okay, we're trying to find wave 4 low. The way you do this in Elliott is you connect waves 1 and 3 and then project up from 2. And that would have given you a little bit of an overshoot through the channel and back up. Potentially, guys, we could be done with wave 4, which means we're going to have a wave 5 up. So now that we know potentially where wave 4 is over, we're going to do a 2-4 Elliott channel, project up from 3, and that's going to give you a wave 5 target zone, which is up around 84. Okay, let's even zoom in further here. Let's do a little upside Fib projection in wave 5. And what we're doing here, guys, is we're gathering evidence to figure out where I want to sell a call. I'm long XLK in one of my accounts here. I have 100 shares, and I want to cover it in the event that this right here plays out and we can collect a little bit of premium in the event that that happens. So let me just do this, show lines. Okay. So going through, I'm going to go down my wave 5 menu, 5 verse 1 plus 3. I'm going to pin it. Now I'm going to have Joe, the intern, fast forward it here as I go through and do the wave 5 projection. That was a lot of work. So basically there's 2 tight zones. Joe the intern's laughing at me behind the camera. There's 2 tight zones, right? There's one around 83.5 to 84.5, and then there's another cluster of Fib up around 86. Let's split the difference, right? Even if this is going to move up in wave 5, I'd have a hard time believing we're going to get too much above the 86 level. Now, the other thing is wave 4s are typically long and drawn out, either triangles or complex corrections. So this could also just be A down yesterday. We're doing a B up, and we're going to have a little bit more back and forth right here like this, ABC or triangle or something like that. So even then, the 85 or 86 strike that we sell will be fine and we'll be able to collect that premium. But let's go back to the original plan. So let's see what we can find around the 85 to 86 mark. You know, you don't need to go, you can go pretty far out because look at what the path, look at what the plan, look at the context that Elliott is giving us here. If green 3 is done, we then would expect a wave 4 to go. Once wave 4 is finished, then we finally move up in wave 5, and that's where we start getting that blue C up around that upper channel that I showed you at the bigger picture daily chart. That's when we start to threaten new highs. So you're talking into September, right, before we might eventually make new highs. So we got to use that. So here's the platform. I want to protect this little XLK position right here. Have a little bit of profit in this guy. Long just 100 shares. So let me just go to my little IRA right here. We're going to go XLK. All right, so let's go over here. XLK, we could do Augusts. We could do SEPs. Let's look at the SEP monthlies. The calls right here. The 85 strikes are trading for 88 cents. You know what? That's not too bad. 88 cents. If I go ahead, right click, sell a single. 85 call for 85 cents. Makes sense. Boom, and fill. So guys, that's how we do a little covered call, you know, using Elliott. Oh, and one thing I forgot. Let's go back in, actually. Let's go back in. Come back in. I want to go back on the green screen, something I forgot to do. What was the delta? I didn't even look at the delta because I don't really care because I want to trade the underlying stock based on Elliott and Fib, but I'm just curious. If we go back in, what was the delta of that 80? Oh, it's a 30 strike. It's a 30 delta, right? So it's saying there's a 70% chance that that finishes out of the money. Said otherwise, if you look right here, probability out of the money, 71% chance, basically a 31 delta. So, you know, so basically, I think we're increasing our chances by just taking the option market's kind of indication based on what the standard deviations are, probability finishing out of the money. You stack the odds in your favor by doing that kind of analysis. It's a little bit more advanced, but don't worry. We walk you guys through it every single day as my team and I, we analyze the markets and trade the markets in real time, the hard red edge of the charts with real capital. Hope that makes sense. See you guys. Have a good day.